What is up, guys? Happy Monday. Today, we are going to go over the power of opportunities and cycle that back to understanding risk to reward, right? So let's go ahead and get into it, guys. I want to go ahead and break down the head and shoulder setup, right? So let's go ahead and run with that. Let's go. Oh, hold on. Is it command? All right, bet. Sorry, guys. I'm backwards right now. All right, let's go ahead. All right, so again, we need to start off with consolidation, guys. Understanding the head and shoulder setup, it works really well if we can get some type of consolidation, right? Because we want to see a sweep of liquidity, and then we want to see a change of direction. Once we get the change of direction, we want to see if we can take an opportunity and send it back up, right? This is an easier way to see it. Why? Because we're able to see the consolidation that's happening inside this area, right? The consolidation that's inside this area. So it's much easier to see, especially when you understand liquidity. Now, this is the thing, right? There's two ways to see this head and shoulder pattern, right? When we're in an uptrend, it's important that we understand break of structure, right? Once we understand the break of structure, this is telling me that we want to go ahead and continue with these buy opportunities. Give me a 2 if that makes sense. Right now, how does the head and shoulder, how does the inverted head and shoulder tie into the starting point? Right? Let's go ahead and break that down. Because let's go ahead, I'll copy this. Yep. Use this as my zone. Right? How does the head and shoulder tie into the starting point? So if we know that we're looking for buy opportunities based off of break of structure, that's telling us the market's bullish. The market wants to continue bullish right now, right? Now, if we're waiting for buy opportunities, usually the market likes to come down in a staircase pattern, right? Now, the thing is, it's way easier to see a head and shoulder if it is building liquidity, but it's also just as good if it's just a clean lower low, lower high. We touch the zone, we change direction. So this right here, guys, we need to understand this as well. This is I would say more of a cleaner head and shoulder because there's less noise, there's less liquidity to confuse you with. But nonetheless, if we understand break of structure and change of direction, this goes hand in hand with understanding liquidity, with the break of structure to the downside, or understanding liquidity with the liquidity sweep, followed by a change of direction. Give me a 5 if that makes sense, guys. Both are just as good. It just matters of what is the market giving us? What is the market giving us at the moment? Is the market giving us a whole lot of liquidity with the liquidity sweep and then a change of direction? Or is the market just making simple staircase lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, change of direction? Both are equally as good. Okay, I just need to make that clear. Both are equally as good. But today I'm going to go ahead and give the example for this. Okay, for this one here, because I feel like a lot of people have more trouble with this one because the consolidation gives people problems. It confuses a lot of people, in my opinion. So I want to go over this one because if you can understand this one, guys, you can for sure understand this simple structure, right? Because there's less noise, less thinking. You understand, where am I? You understand lower lows, lower highs, break a structure. Lower lows, higher high, change of direction. So if you can understand this one here, you could for sure understand that one there. Okay, just want to make that known real quick. I think it's this one. Yeah, let's delete that. All right, so let's go ahead. Let's go ahead and start building up some liquidity. Now, guys, every time I draw it for a specific reason. I draw it so you guys can have really good notes. Okay. So if you guys are just watching right now, please make sure you guys take some time and take some detailed notes. Okay. Now I'm gonna make this consolidation simple. We can easily see, right, that we have, where's my tools? Resistance, support, resistance, support. Give me an 8 if you can see what I'm drawing out here. Give me an 8 if you can see this consolidation. And if you can't, no worries. Let's make it known. Let's make it known. Let's double it. Let's double it. No, that's too much. Too much. You're scaring me now. That's fine. That's fine. Right? Consolidation, right? A whole lot of support and a whole lot of resistance going on. Right? But again, this is also liquidity. So what's good to understand, guys, consolidation, support and resistance, it is also a form of liquidity. Super good to understand. Right? Now, this is the thing. I'm going to go ahead and just leave it like this. Okay? I'm going to leave it like this. Now, this is the thing, guys. Just like my drawing, if I'm seeing liquidity, when it comes to a head and shoulder setup, I want to see a liquidity sweep. I want to see the market give me a break of structure to the downside and then change direction and go higher, right? These are our buy setups when the market is bullish, okay? So let's go ahead. Let's say the market just gave me a nasty liquidity sweep / break of structure to the downside. So let's go ahead. Liquidity was taken, right? If you trade it like smart money, yes, liquidity was taken. But for head and shoulders, for the levels, I want to go ahead and call this a bearish break of structure, right? Because in my opinion, anytime we get a break of structure, it's a liquidity sweep, right? I want to keep things simple for you guys, okay? Now, we only have the break of structure now, right? We only have the break of structure, which means we haven't gotten the full inverted head and shoulder setup. So right now we need to wait for this change of direction. As soon as we get this change of direction, we now have it inverted. We can now start looking for buy opportunities. Okay, so let's go ahead and start this. Now, when it comes to the starting point setup, guys, it's super important that we look for the breakout rally, the last starting point. I'm sorry, the last selling candle before the breakout rally. Super, super important, guys. This is going to help us find our starting point. So once we find this breakout and this change of direction, as soon as we see that breakout rally, we have to go ahead and follow that rally back down to our last selling candle. Give me a 1 if that makes sense. We don't care about the rally that happens first. It's not about the rally that happens first. It's not about this rally. If this rally gave us the break of structure, then that rally matters. But let's say we have a rally, it pulls back. This rally no longer matters. We have a rally, it pulls back. This rally that just happened no longer matters. We got a rally, we have a breakout. This rally right here is the rally breakout that matters. Give me a 10 if that makes sense, guys. Let's go. Let's go. So let's go ahead and get that going. Let's say we have a small little pullback here. Okay, cool. Oops. The market keeps going. Let's go. Market keeps going. We have a pullback here. Now, this is the thing, guys. Sometimes the market's not always clean and crispy. What if the market wants to do something like this? Touches your zone again, and then we have another pullback. And then the market breaks out. Boom. Nasty rally. Nasty, nasty, nasty rally, guys. Would you consider that a change of direction? So where would we be catching the buy, Vinny? Logan, I'm explaining the whole setup right now, brother. The whole setup. So if this is making sense, just sit tight, bro. I'm going to go ahead and show you our opportunities right now. Make sense, Logan? Let me know, bro. So we have our change of direction, right? Liquidity was taken. So let's go ahead and label this my change of direction, right? Let's confirm, okay? Now, this is the thing, guys. Once we find our breakout rally, we have to follow that rally back down to the last selling candle. We have 1, 2, right here. This is our last selling candle right there, guys. So let's go ahead and mark that zone up. This is one of our opportunities, Logan, right here, bro. This is called our starting point, also known as the demand when it comes to supply and demand in the market. So this is our first opportunity. So let's go ahead and just label this. I don't even know how to spell opportunity. I'm not even going to try to spell opportunity, my boy. But this is opportunity number 1. Give me a 5 if this makes sense, guys. Opportunity number 1. Awesome. Let's go. Now, when it comes to the starting point, once we find our starting point, guys, it's super important we find the lowest wick in that area. That lowest wick is going to be our stop loss. So if the lowest wick is here, then we can go ahead and use this as our stop loss. If the lowest wick is here, right, let's not like, you know what, we're just going to put our stop loss right here. Guys, listen to the market. The market is always going to help you out. You just have to listen. Most of the time, when I was back testing, anytime I didn't listen to the market, I always ended up taking losses, right? So this would be a tight stop loss. This would be more of a looser stop loss. It's giving the trade room to play. And again, we want to use our 1 to 3 risk to reward. But again, if the stop loss, or I'm sorry, if the lowest wick in that area happens to be this one here, we're going to go ahead and use that as my stop loss. Give me a 5 if that makes sense, guys. Let me know. Give me a 5 if that makes sense, everybody. Super important you understand where your stop loss goes when it comes to the starting point setup, because the starting point setup is the first opportunity usually when it comes to a head and shoulder pattern. And the starting point stop loss is completely different than the head and shoulder stop loss, okay? Just got to let that be known. Now, this is opportunity number 1. Our second opportunity is going to be my breakage structure. Guys, if you do not label your breakage structure, especially when you are new, right? As soon as you can understand breakage structure and what this means, guys, mark it up. As simple as it may seem, as ugly as it may look on your chart, it is going to help you understand continuations and reversals, okay? So once we have our change of direction, this change of direction is what gave us the confirmation to start looking for buys in the first place, okay? We have opportunity 1 off that, but this last break of structure, very, very important. The last break of structure is going to be my shoulder zone. Now, the thing about the shoulder zone, and I'll go ahead and break this down on the live chart. The shoulder zone is from the lowest wick, right? The lowest wick in this area to my closest body point. So let's say my lowest wick is here, right? My closest body point, I'm going to lift up this box until it touches a candle body. So, right? Well, actually, it's this one here. This one here. To my closest candle body. Now, let's just say your candle bodies are a bit higher. That happens, right? Not everything is going to look the same. My lowest wick would be here. To my closest candle body, that's going to be your shoulder zone. Give me an 8, if that makes sense. Right? It can be different widths. Let's just say, your zone is something like this. Your closest body is like that. So then your zone is going to be like this, guys. So every setup, when it comes to the head and shoulder, your shoulder zone width, the shoulder zone width is going to be different when it comes to every setup. So it's very important to understand lowest wick to closest body point. Okay. Now, this is the thing. When it comes to the stop loss to the head and shoulder setup, my stop loss is going to be the dominant low. And again, wicks do matter. So if you have a wick, make sure you put that stop loss at the wick. So then our second opportunity is looking something like this. Now, again, guys, entering at the first touch is completely optional. Personally, for me, I'm always entering off the first touch. Vinny, what does that mean? What does the first touch mean, bro? I'm completely new. I got you. So for me, I noticed the pairs that I trade, right? A lot of people either enter the 50% of these zones or the first touch of these zones. I used to, right? I used to enter at the 50%. And then I realized the pairs that I trade, they would come down, tap my zone, and then take off. And then I would miss the opportunity. So for me, I'm going to enter at the very, very top. But you have to understand, right? This is your psychology side. You have to understand there are millions of people entering at that 50%. So if the market does happen to give you a little bit of drawdown, it's okay. A lot of people are entering inside this zone. As long as your stop loss does not get hit, as long as the market does not hit your stop loss, you are okay. The market can hang down right above your stop loss. But if the market does not touch your stop loss, you should not be exiting the trade, right? Even if the market looks like this, guys, because there are plenty of times where the market is in your trade and in your opportunity and it's consolidating. And you know what it looks like? It looks like it wants to go down and then shoot up. You know how many times I've missed out? I've missed out on opportunities because I wanted to go ahead and try to catch this trade so we can get a better entry to send it back up. But you know what happens? I exit the trade right here, and then the market continues to go higher. So what's super important, guys, it doesn't matter how the market looks. It can be the ugliest market inside your zone. But if you know where your stop loss is and the market has not touched your stop loss, do not exit your trade. We are running our opportunities. We are running our risk to reward with the opportunities that we have. Give me a 1 if that makes sense. Because this will happen. I promise you. Right? Your emotions are going to get in the way because of what we learned. We see this as liquidity. And when it comes to a head and shoulder, just like this, we would like to see the market sweep liquidity first and then continue. But the market does not have to do that, okay? So just keep that in mind. But now we're going to go ahead. As the market is coming down, it's super important that we run our odds, right? Because we don't know what zone the market is going to hit or respect. If the market respects this, it'll, matter of fact, Vinny, how will I know the market will respect the first zone? Somebody asked me that. Somebody type in the chat or unmute Vinny. How will I know the market will respect the first zone? Go ahead. Go ahead. Let me know. Vinny, how will I know, bro? What hints will the market give me that'll tell me the market just respected the zone? Thank you, Nova. I appreciate you. Nova asked, how will I know if the market will respect the first zone? Nova, amazing question. I love that. So as the market is coming down, it's super important that we locate our breakage structure to the downside, right? We have our breakage structure. Label that. At this moment, this is my change of direction. Okay. And we're going to rinse and repeat. As the market breaks structure, we move our zones. We adjust our zones. Guys, is this familiar? Does this seem familiar to you? Have we changed anything when it comes to levels and finding opportunities? No, we haven't. Lower low, lower high, break a structure. The market is in my zone, Vinny. Vinny, the market is in my zone. How will I know if the market is going to respect? Well, if we can get a change of direction, this is why it's so important to mark up your break of structures. Because as soon as we change direction and we break and close, giving us the change of direction that we're looking for, this right here, guys, is letting us know opportunity one was the zone that was respected and will most likely continue going higher a bit longer. Right? It'll go higher a bit longer and it'll save opportunity number two for later. Give me an 8 if this makes sense, guys. That's how you know that opportunity one was the zone that they wanted. Okay. Now, Vinny, how will I know if opportunity one isn't the zone they want? How do I know? Somebody asked me that question. Vinny, how do I know if opportunity zone one isn't the zone? Because that's something that we have to understand too, right? We have two opportunities and we never have to jump in first. We never have to be the first ones in, right? We can wait for confirmation in order to get into these opportunities. So Vinny, how will I know if opportunity number one isn't the zone? Well, if we don't get a change of direction and we continue down, that's how you know. Opportunity zone number one wasn't the zone. We can go ahead and delete that and we stay fresh. Let's continue. Pull back, break a structure, change of direction line. Did we get the change of direction? Yes. So opportunity number two is the zone that they wanted to go with. So we can go ahead and we can possibly catch another opportunity when the market pulls back. I need my tools, bro. When the market pulls back, we can go ahead and continue this bullish move. And this goes hand in hand with risk to reward, guys. If we took a loss right here at 1%, we are down 1%. Let's go ahead and draw this out, right? Let's bring it back full circle, because anytime we have a head and shoulder setup, I would say 70 to 80% of the times, the starting point zone is a bit higher. Or let's just say this. Sometimes the starting point zone and the shoulder zones aren't going to overlap. They're going to be in different areas by a couple pips, right? If they did overlap, then we don't really have to run risk to reward. We could just take one trade. But because this example, the starting point is way up here, we have to run the opportunity up here. And then we have an opportunity down here. So we have to run the opportunities. So if we took a loss, it happens, right? We're down 1%. But if the market respects this zone here and we get our 1 to 3, right? We get our +3. We are up +2. We're up. That is a good thing. That is a good thing, guys. Give me an 8 if this is making sense, guys. Give me a 1. Unmute. Let me know. A thumbs up. A fire. Let me know if this is making sense for you guys. And give me a question mark if you are completely confused. Logan, bro, is this making sense, bro? Let me know, Logan. Let me know, bro. Oh, snap. How'd I do that? Now, this is the thing too, guys, right? Do we have to take these trades first touch? What does that mean? What does that mean, Vinny? First touch. Like, do I have to take it? Usually people are looking to take trades off the first touch, like myself, right? I like to play aggressive sometimes. But if you don't like to play aggressive, guys, you don't have to play aggressive. You can just wait for confirmations. So let's just say we had a break of structure to the downside. We have to mark it up, right? Always mark up your break of structures. Break of structure. So let's go ahead and label this before we continue. Right. And I'll use myself as an example because I usually play aggressive and I'm usually down to take a loss and run my risk to reward. Right. So let's just say, Vinny, I just entered this trade. Right. But let's just say Nova likes to play conservative, and Nova is waiting for this change of direction before entering her opportunity, before taking her trade idea, right? Let's just say I took a loss. Because Nova was waiting patiently, she didn't enter. She was waiting for her confirmation. She was waiting for the market to give her that reversal, change of character confirmation, so she could look for her opportunity to send the market back higher, right? So you don't need to take these guys off the first touch. You can always wait for your confirmation. So for some people, they're not taking this loss, right? I took the loss, but let's just say Nova, she's at zero. She never took a trade. Does that make sense? And then if this trade does end up hitting, right? If this trade does end up hitting and going our way, right? And does go our way, I'm up +2, but because Nova was waiting patiently, she took that +3 home. So she's up. Does that make sense, guys? I just got to let that be known as well. Where's my back button? Is this it right here? Oh, no. If you wait patiently, guys, this is going to help you take losses off of your book because you're waiting for the confirmation here, right? Because you're waiting for the confirmation. But now, this is the thing, right? This is also the con, right? The pro, the pro and the pro and con, right? The pro was she didn't take a loss, right? But the con, sometimes when you're waiting for this confirmation and we get the change of direction, and let's say we're looking for buys down here, sometimes the market won't give you an opportunity and it'll just take off. So sometimes you miss this trade. Does that make sense? Give me a 1 if that makes sense, guys. So the pro, she didn't take a loss, right? She didn't take any trade. She took no loss. But the con, sometimes if you're waiting for this confirmation, the change of direction confirmation, sometimes, let's clean this up, it does not give you the entry. And that happens sometimes. Okay. So that needs to be known. Now, that doesn't mean you're a bad trader or you did anything wrong. That doesn't mean that. It just means the market missed your opportunity by a couple pips, but you were right. So you have to understand you were right. You did nothing wrong. The markets just didn't drop down a couple pips to pick you up. Does that make sense, guys? Give me a question mark if you are confused right now. And give me an emoji, any emoji, if this is making sense. If we are good to continue. You got to stick to your plan. It doesn't matter, guys, whether you enter first touch or you're waiting for confirmation. It doesn't matter. Like, you just have to stick to it. The person who is the most consistent with their rules is going to have a good time in trading. Guys, the person who is the most consistent with their rules is going to have a good time in trading. You know why people can't listen to the rules, guys? Because people are so freaking stubborn and they hate being told what to do. People hate going into work and being told, hey, go do this. After you're done with this, come to me because I have something else to give you. People hate being told what to do. That's why most people, they don't want to work a 9 to 5 and they want to do their own thing, right? Which is understandable. But when it comes to the charts, you have to listen to the rules that you are setting out for yourself. This is going to give you a way better time in the market, guys. I promise you. Okay. I promise you. But if you can't even listen to yourself, this is the thing, right? You're labeling these rules down for yourself. But if you can't even listen to yourself, man, you're going to have a rough time. You're going to have a rough time in these markets. So how do I listen to myself, Vinny? You have to stay patient and let the market develop the confirmations that you need to see. Give me a 2 if that makes sense. How do I follow my rules? How do I listen? You need to stay patient and allow the market to develop and give you the things that you need to see. Very, very important, guys. Very important. Can we continue? Let me know if we can continue. We got about 20 minutes left on this call. But I wanted to break this down. Let me know. Can we continue, guys? Let's get it. Let's get it. Let's go ahead and see what type of market structure is on. I want to find good opportunities for you guys. Can I move this higher? Oh, yeah. I want to find really good opportunities for you guys, good examples. This is a good example. This is an example of the market being very, very close. Well, no, I would say that's not. So this is the thing, depending on how you're looking at it, depending on how advanced you are, right? We have a setup here where my break of structure is there and my change of direction line is here. Give me a 3 if you guys can see this structure here. Awesome. Right. And again, look at the consolidation. Consolidation. Boom. Boom. Breakout. It's a lot easier when we have consolidation. Okay. But again, guys, we have to draw up our break of structure. Very, very important because that's how we're going to find our left shoulder. Notice your break of structure will be your left shoulder and the high is going to be your head. Your head. Okay. That's your stop loss. So let's go ahead. Let's go back. Now, this is my breakout rally. Notice how I have 1, 2, 3, 4 candle breakout rally. Would you guys consider that a breakout rally, guys? You tell me. Would you consider that a breakout rally? Yes or no? Yes or no? Yes. Let's go, Nova. Let's go, Nova. My last buying candle is right here. This is my starting point. This is an opportunity for me. Oops. Oh. Now, the highest wick in that area for my starting point would be here, right? But this is the thing, because my left shoulder is here and the stop loss to my left shoulder is the very, very high. This is something that you have to ask yourself. Do you want a tighter stop loss or do you want to give your trade a little bit of room to play? Now, that is totally up to you. You have to ask yourself that. For me, I like to put my stop losses at the high. I want to give my trade room to play because sometimes, you know what happens? This will happen to you too. It happens to everybody. The market will go ahead, right? It'll come into your area, give you profit, hit your stop loss because you used the tight one right here, right? But because the market never broke the high, we continue to the downside. And for me, personally, I hated getting stopped out early, and then the market continuing to the downside. So an easy fix, if this is something that is happening to you, just use the dominant high. Guys, it's all about risk to reward and calculating. This can be a $50 stop loss. This can be a $10 stop loss. This can be a $10 stop loss. This can be a $50 stop loss. Does this make sense? Give me a 7 if this is making sense, guys. That's all about calculating. Okay? All about calculating. So now when it comes to my shoulder, my highest wick is here. My closest body point looks like it's right there. So my head and shoulder setup. Notice how they're right on top of each other. This is an opportunity where you don't really have to run too much risk to reward. They're overlapped. So this opportunity, you're really going to just use run. But one opportunity, I'm sorry. But can you see the setup that I'm trying to explain to you guys? Can you see the structure that I'm trying to explain to you guys? Now let's take a look what happened in here. I'm seeing some type of structure that's happening inside of here. I want to see what the market respected and what the market violated. So let's go ahead and drop down to the 15-minute. Let's go to the 30-minute. Let's go to the hour. Okay. So let's go ahead. This is a perfect example as well. So notice, we're in an uptrend right now, right? The market is going up right now. Would you guys agree? Is the market going up right now? Would you guys agree? Yes. So if the market is in an uptrend, we want to see an inverted head and shoulder. Right? We want to see an inverted head and shoulder. But the thing is, we have to find this when the market is pulling back. When the market is pulling back. When the market is pulling back. This is the gem right here, guys. When the market is pulling back. Look at this. When the market is pulling back. Higher high, higher low, higher high. Guys, look at this structure here. It's everywhere. It's in almost every pullback. Inverted head and shoulder. Inverted. Inverted head and shoulder. Inverted. Almost every pullback. So you have to understand this. So look, we know we're in an uptrend because we had break a structure. So from here, we need to follow the structure back down. Okay, we need to locate our breakage structures to the downside and find our change of direction. So let's go ahead and replay this. Again, we are looking for the market to give me my breakage structure followed by a change of direction telling me the market is ready to go higher. Okay, so let's go ahead and continue. We have a breakage structure. Let's go ahead, identify that. Now my change of direction line is going to be right here. Let's continue. Consolidation, we have the breakage structure. The market does not change direction, guys. Very, very tight. Look it was holding on. It was right on the border, bro. But if it does not change direction, it does not go higher. If it does, we will go higher. But notice, perfect example of the market just holding the structure down. Break a structure, change of direction. Let's see, is it going to hold it down? Nope, I'm sorry. It changes direction. Awesome. So now we have my left shoulder here. Where's my breakout rally, guys? My breakout rally to my change of direction. If you guys can annotate, you can totally annotate. Matter of fact, Carlos, remember when I used to do this, Carlos? My boy Carlos used to thrive on this, bro. Guys, which arrow is my starting point candle? We have a couple rallies. What arrow is my starting point? What rally gives me my change of direction? The green arrow. Notice this last selling candle gives me my breakout rally to the upside. So this is going to be opportunity number 1. Now, if the market taps in, if the market comes into this zone and takes off just like this, that zone was taken care of. They're going to save my starting or my break of structure zone for later, right? So right now, this is my starting point. Now my break of structure, this is a little iffy. Okay, look at how it looks a little iffy. It looks kind of strange. I'm going to use this low wick. Let's see. Let's go to 2 hours, see if we can break that up a little bit. Do a 30-minute. Yeah, you see how the market is bouncing off this zone? I want to use that area. Lowest wick to my closest body point. Now, this is my shoulder. This is my second opportunity. Guys, is this making sense? Give me a 3 if this is making sense. Why are we looking for buys? 1, because we have the change of direction here. If we never change direction, we're not looking for buys. But because we went from downtrend, because we went from downtrend to uptrend, that's why we are looking for buys. Okay? Opportunity 1, opportunity 2. Let's see. Look at guys. Was opportunity 1 taken? You tell me, guys. Was opportunity number 1 taken? Yes. This is why you take opportunities as they come. 1 to 3, smacked. So look at guys. As the market is coming back, I'm now focused on this setup here. Okay, I'm now focused on this setup here. This zone was already taken. That was a winner trade. That trade was a winner. Okay, so let's go ahead. We'll delete. Now let's see. Let's go ahead and run our risk to reward as they come, right? Because visually, that's what you're going to see and that's what you're going to do. So this trade right here was a win. That was a win. Actually, let's go ahead and put this. Give me my check, bro. Or give me my dollar sign. That was a win. So right now we are up +3. Visually, this is your next starting point that I would see and I would look at as well. So let's go ahead and take a look. So notice, if we would have entered off the first touch, instead of being patient, our stop loss gets hit, right? That's okay. It is what it is. We ran our risk to reward because we're looking for buys. Now, this is the thing, guys, right? You also have to understand market structure in a whole. Higher high, higher low, higher high. Right? This gave us another BOS. So we should have already been looking for buys. This starting point is definitely for this breakout. So we should be using this as a reference to continue buying, right? But now this is the thing. Are you taking it off the first touch or are you waiting for confirmation? That is totally up to you. But let's just say we were playing aggressive because you know what? We felt good smacking a trade, right? We entered again. We lost, down 1. So now we are still up +2. We are still up +2. Okay. Let's take a look. Let's stay fresh. Stay fresh. This is my last opportunity. My stop loss is at this low. And I want to see if we can continue to make new highs. Again, guys, if you understand structure and a whole, if this is my higher high here, higher high, higher low, higher high, it's okay if the market wants to make its way down lower. But as soon as we stop and start going higher, we are aiming to make new highs. Give me a 3 if that makes sense. So in essence, we're waiting for the market to come down, give me a higher low so we can take this trade, shoot the market up higher so we can make a higher high. Okay? It's all about foreseeing the structure on a higher time frame. If the market is telling you, yo, we are going higher, we have to follow that. We have to run that. So let's go ahead and see if we can go ahead and smack this trade. Now, again, this is a 1 to 5. Okay, we can easily run with our 1 to 3s, but if you understand swinging and if you understand momentum, guys, EUR CAD is in momentum right now. Okay, where is my? It's in momentum, higher high, higher low, higher high, higher low. If we can catch momentum, we're making new highs. This is how you hold longer trades, right? This is how you hold your trades longer, and this is how you swing. So we took one loss here. Let's continue. Oh, it missed me. I think that was the one. Let's see if we can try and catch this. We need that change of direction. Let's see if the structure is different on the 4-hour. Oh, look at that. Look at that, guys. On the 4-hour time frame, this whole thing is the starting point. Guys, you see how like structure, starting points, head and shoulders, bro. We should have already been in. But that right there, crazy. But now let's see if we could find a re-entry. That was fire. I ain't gonna cap at you. That was fire. But now let's see. So that's a confirmation, right? That's a 4-hour starting point along with the 1-hour head and shoulder. Confirmation, man. So let's go ahead and see if we can catch this. As of right now, this is my liquidity sweep, or that is a break of structure to the downside. We are awaiting for my change of direction. Let's take a look. Change of direction. Give me an opportunity. Come back for me, please. Let's end the call strong. Give me an opportunity, bro. Not while I'm on a call with my friends, bro. Oh, not in front of my friends, bro. You gonna make me look like a liar, big dog? Give me that. Come on, give me an opportunity, my boy. Give me that. Oh, that was another one right there. Clean inverted, bro. But nonetheless, guys, we can see the structure working. Guys, this is what I'm saying. Sometimes this is going to happen. And this right here, that's sniper problems. Were we right? You guys tell me, were we right on this buy? On this bias? Yes. As a trader, I have to be right with that. Does it make me sick to my stomach though? Oh, you better believe it. Did we hit TP? Oh, you better believe I'm sick right now. I'm sick. Don't talk to me, my boy. Left without us, but like Julio said, she'll come back, and yeah. So I'm saying. That's what I'm saying. But the thing is, guys, again, right? Notice. Let's clear some of this stuff up, and we can end the call like this. Notice, guys. We could have easily just ran with the starting point to make things easier on us. And that's one thing I want to end the night off with. You see how sometimes when we stick to one time frame, we don't even get the full picture. But notice on the 4-hour time frame, notice how simple this setup could have been. Yes, our setup could be looking like this, but let's see. This is already a 1 to 2. We're already at break even and we have partialed out. But let's take a look. Where's the market right now? Is this live price? Oh, did the market come back for me? Oh no. Oh, the market came back down here. Almost. Let me see. Did it? I think it was just shy, bro. I ain't gonna cap. Ooh, just shy, right? Just shy. But guys, you can see the things working. You can see the momentum. Guys, you want these trades. You want these opportunities. Guys, this is 130 pips, 120 plus pips on EUR CAD. I promise you guys. I promise you guys. Let me stop sharing. I don't think you guys understand. I promise you guys. Some of you guys' favorite social media traders, the trading gurus on social media, they're not catching 130 pips on Forex pairs, on EUR CAD. I promise you. I'm looking at these people's numbers. I'm not saying they're not making money, but the amount of pips you could be catching could be way more than your favorite social media trader. You understand the skill set for yourself. Understand how to read the charts. Ask your questions. Understand your strategy in a whole so you can catch these big moves. Guys, when you have capital, you don't need to catch 130 pips. All you need is 30 and you're good. You're making some dough, you're in and out of the markets quick, right? But when you don't have capital like moi, right? We don't have hundreds of thousands of dollars to play with. We have to play it smart. We have to be very detail oriented. We have to use our strategy, the structure, all the confirmations in a whole so we could run these opportunities and catch the pips that we need to grow our account. Give me a 10 if that makes sense, guys. I promise you. Guys, one thing I know for sure is if you put in the time, you're gonna grow. There is no feeling sorry for yourself. I don't feel sorry for you. I don't. We all start at the bottom. I didn't know shit. Miguel Jr., Gio, Neri, Carlos, guys, nobody knew anything before coming into the trading space. Hardly anybody ever does, right? Hardly anybody ever does. No one is going to show up for you. Only you can show up for yourself. Okay, ask the questions for yourself, raise your hand, mark up the charts for yourself, send in the charts for yourself, ask for feedback so you can grow, and let's grow as a team because there are 4 more months in this year. Where are you going to be as a trader come January 1st, 2026? Where are you going to be? Where's Nova going to be? Where's Fernando? Where's the Joseph? Where's Carlos? Where's Kike? Where's Julio? Where's Logan? Right? Where are you guys going to be January 1st, 2026? 4 more months. I can guarantee you, you guys lock in. You take detailed notes. You ask questions. You stand up for yourself for these next 4 months. And I can promise you, your trading January 1st is going to be in a different level. It's all about levels, guys. It's all about consistently growing level by level, level by level, until we were like, you know what? I think we're really making a difference right now in our trading journey. And this is where I want to be. Once we hit that level, we consistently grow. The compound effect starts to happen for our accounts and for our psychology. Everything is starting to win. Everything is starting to look good. But with that being said, guys, I hope you guys had some clicking moments. I hope this call, gave you a refresher on how we can run our opportunities along with risk to reward, right? Because it's very important. Mark up your charts, send in your charts, ask for feedback, trade responsibly, and I will see you guys on Friday, guys. Peace out.